Hello friends, welcome to one more edition of my webinar series Financial Bites at Dhan Tripti. Today we are going to talk about investing in gold. Before I start my presentation, a quick disclaimer. The advice which I give here is general in nature and may or may not suit an individual. For following my advice, please consult your advisor. The topics which we are going to cover today in regarding investing in gold are as follows. So first we will talk about certain facts in gold investment, why people are buying gold or why most of the people invest in gold, what are the long-term returns which gold as an investment class gives to a investor, and how we should be holding this gold. So there are two types of gold holdings which we are going to discuss and then compare which is a better way to hold gold. We will also look into two important paper golds and what are the best practices we should adopt whenever we are buying gold. So moving on, let's talk about certain facts on gold investment. Now, holding gold has been the most cherished investment for Indians since centuries. So, you must have seen that your mothers, grandmothers have been holding gold for a very, very long time. And this gold either mostly is held in the form of jewelry and it has been passed on from one generation to another and it keeps on getting added at each stage and nobody ever sells his jewelry. India imports about 800 to 900 tons of gold precisely because of the above reason, which almost amounts to about 202 lakh 10,000 crores, which is a very huge sum, and it involves a lot of foreign exchange for the government of India. And so, government has been trying to encourage different forms of gold holding just to save on precious foreign exchange, and we will talk about that in later slides. Now, why so much fascination to buy gold? Now, there are variety of reasons why people buy gold, and there are variety of uses to which the gold can be put to. First, of course, is the love for jewelry for ladies, and these days even men are wearing gold rings, gold chains, etc. And during weddings, gold is the most prominent way to gift your loved ones. Sometimes it is also bought by as an emergency fund. In olden days, people used to feel secured when they used to buy gold because they used to think that it can be used in case of any emergency or for rainy days. Similarly, the cash, India has got a very large cash economy, and the only way to consume cash is by buying gold from a nearby jeweler, which is an illegal process. But one of the reasons why people buy gold is this also that they have huge chunks of cash with them. Gold, of course, is bought for capital appreciation. Over a long period of time, the values of gold keep on increasing, and therefore people make money. It is considered as very safe and liquid because you can go and sell it anytime to a jeweler. And of course, it is convenient to buy because there are jewelry stores every nook and corner of the country, and so it's very easy to buy and sell gold. So these are variety of reasons why people are or are investing or buying gold. Now, what has been the return on investment? Now, there are very contradictory views on what gold as an asset class gives you return. So, to understand that, before let us understand how the rate of the gold or the price of the gold is dependent on. So as a gold is in any free market economy, the value or the price of the gold depends upon the demand and supply. So you must have seen when the demand goes up, the prices of the gold goes up, and usually this happens during wedding seasons in winters when there are many marriages happening, and therefore suddenly the demand for gold increases, and you will find at this time usually the prices of gold are on the higher side. or if there is a break in the supply or the supply goes down, then the prices of gold also go up. Another important feature, parameter on which the gold price depends, the dollar rupee exchange rate. As you say, the maximum demand for gold in India is met through imports, and 800 900 tons of gold is important. So as the dollar rupee, as the rupee gets more and more depreciated vis-a-vis dollar, the price of the gold again increases, or the vice versa. Then, if you look at on an annual basis, the gold is giving very extreme kinds of returns. For example, in the year 97-98, gold in a one particular year gave a return of negative 14%, and to as high as 37% positive return in the year 2005-6, right? So gold, though gives returns, but it is volatile in nature. In certain years, it is going extreme negative, and in certain years, it gives you a positive returns to a great extent. Usually, gold is set. The prices shoot up during uncertain times when there are times of wars or some economic crisis or some epidemics like the one we are facing now in form of COVID. We find that suddenly the gold prices have shot up. Why? Because people look at gold as safe haven. So whenever there is any uncertainty, people start buying more gold. And of course, the prices of gold are also dependent on the purity of the gold. So you have gold 20 carat or 22, 24 carat. Depending on the purity, the price of the gold varies. Now, this brings us to a question. So, as an asset class, on a long-term basis, what is the rate of return gold is expected to give? So, there's a small statistics that in India, for a 40-year period between 1981 to 2020, the long-term CAGR has been 8.48%. Now, this is pretty good, but I just want to be very careful when you follow this kind of when you get impressed by such kind of a CAGR, because there have been a very long periods of time where gold has not given any return or has given negative return. For example, there have been years where 5 years in a row the gold prices did not move, and there have been times when in 6 months the gold has appreciated by 30%. So, it's very important to understand that on a long term basis it may give you a good return, but there are reasonably long periods in between where gold does not give any return or give negative return. So you should keep in mind before you really invest in gold just for a return or a CAGR sake. So moving on, how can you hold gold? Okay, so there are basically two ways to hold gold. One is a physical form of holding gold, and other is called paper gold, or holding the gold in paper form. So what exactly is this? So when I say physical gold, you can hold gold in form of a jewelry, gold coins, gold biscuits, gold bricks. If you have large chunk of money, you can even hold a brick, right? So this is physical gold. You can touch that metal and own it. Well, what is a paper gold? There are three ways to hold paper gold. One is digital units. So what is it that? For example, there are a lot of digital wallets these days like Paytm, etc., where you can buy 1 gram of gold or even lower than that. So you pay them and they give you just units. They just tell you that your account has been credited with certain amount or certain units or certain grams of gold. So this is called as holding the gold in digital units, right? Other way to hold a paper gold is through bonds. So you have what is popularly some of the popular bonds are the sovereign gold bonds, which are issued by government of India. And then you can also hold paper gold in terms of exchange traded funds. So exchange traded funds are like mutual funds, and so you again hold gold in a paper form, right? So basically, we will talk more about these sovereign gold bonds and exchange traded bonds a little while from now. But before that, let us look at what are the advantages or disadvantages of holding the uh, gold in a physical form or a paper form. So first, let us look at the advantages of holding the gold in a paper, sorry, in a physical mode. So of course, when you hold it in a jewelry form, you can use it. It is variable, you know. You can, or you can, even if you're holding it in a coin form, you can go to a jeweler and quickly convert it into a usable jewelry. It is very convenient to buy and give them. So usually people during weddings or for any other events where they want to celebrate and want to gift their loved ones gold. So usually it is done in the case of you by buying by jewelry and gifting it. Liquidity is very high in case of physical holding because, as I said, there are jewelry shops every nook and corner of the country. You can easily go and buy and sell there. So liquidity is high, and of course, it is the only way to consume your cash, though it is illegal. I don't subscribe to it, but this is one of the reasons why people are buying a lot of gold. But having seen the advantages, there are some pertinent disadvantages of holding the gold in physical form. The first and the foremost is storing issue. To hold physical gold, you need to have a locker. You cannot store it at home because there's always a risk of theft. So to keep it safely, you have to take a locker and you have to pay some charges. Getting lockers in bank is becoming difficult these days, so its storing it becomes an issue. Secondly, the gold which you are buying, you are not very sure about the purity of the gold, and you may end up buying an impure gold. So that's the risk of holding a physical gold. Then also while buying and selling, you incur some loss because of high making charges or high breaking charges. So if you are holding a jewelry and you're buying a jewelry, so you are not only paying for gold, but you are also paying for high making charges. Similarly, when you go to sell that jewelry, the jeweler melts it. So all the breaking charges or whatever you had earlier paid or the impurities you are not getting any value for that, although you did pay some amount for it earlier. Okay, so there is a loss while buying as well as selling. Then if you hold a jewelry for a very long period of time, the design gets outdated. So the jewelry, the reason for which you bought also gets defeated when the design gets outdated and you now start looking for a fresh design. And of course, to buy physical need gold, you need to have a very trusted source, or the lack of it can create a problem for you in buying physical gold. So, having understood the advantages and disadvantages of physical gold, let's look at paper holding. What are the advantages of paper holding? So, first of all, there are no storing issues because everything is in digital form. It is in a paper form. It is in a bond, or it's just a account statement. So you don't have any storing issues. You don't have to pay for storing. There is no theft issues, right? Second thing, very important, is the purity is ensured because you have been confirmed in a digital form that it's what you are holding is a 24 karat gold. So there is no impurity issues there. There's no loss in buying and selling because no making and breaking charges are involved. Again, it is very convenient to buy and give because it is in a digital form. You can go to a website online, you can buy. You can even give to somebody whom you are not meeting physically. If your loved ones are far away, you can even send them a digital gold as a gift. And of course, as taxation is concerned, it involves a low capital gain tax or a nil tax. And we will talk about it a little bit more when we look at the paper gold in detail. Now, but what are the disadvantages of the paper gold? First, it is not variable. So even if I'm holding some chunk of gold in the paper form, I cannot go to cannot wear it, I cannot use it. Liquidity is variable. Sometimes these paper holdings come with a lock-in period. So we have to be careful about that. There are something which are very highly liquid, but there are some paper holding which are not that liquid. So liquidity is variable. You cannot buy paper holding with cash because everything is paid through bank, and therefore you cannot utilize cash for buying paper holding paper gold. Similarly, you need to be digitally savvy. You need to be aware where you want to buy it from. Do you have a net banking online account from where you can help buy? You can digitally buy paper holding, Another disadvantage is you have to have a demat account if you have to hold paper gold, especially the ETFs and the bonds, right? Or even in case of a digital gold holding, you need to have a Paytm account, okay, or some other digital wallet account. So these are some minor disadvantages of paper gold. But overall, if you see, it is always advisable to hold in paper gold because of the large advantages and large disadvantages of holding in physical form. Now let us talk about the two most popular way paper gold, two most popular paper golds, sovereign gold bonds and exchange traded funds, or gold exchange traded funds to be precise. Let us look at the features of these two paper holding of gold. So sovereign gold bonds come with sovereign guarantee because they are issued by Government of India through RBI. So there is no hanky panky here. You can be assured of everything is fit and fine. So it should issued by RBI in tranches. So it's not open for buying throughout the year. There are definite time periods of 10 to 14 days or maybe less, or a week's time. Every alternate months or so, RBI announces opening of the bonds where people can buy, and it is available at discount to the market prices. Not a big discount, but yes, a little bit of discount is there. You can buy anywhere between 1 gram to 44 kg as an individual, and the best part is that you are also paid an interest of 2.5% on your gold holdings, though they are taxable. But this is the best way to hold gold because you get interest also. You also make money by capital appreciation as the prices of the gold increases over a period of time. Your investment also appreciates. The maturity period of sovereign gold bond is 80 years. 8 years. That means your money your is locked in. You cannot sell before 8 years. Although there is premature withdrawal available from fifth year onwards. So five, fifth, sixth, seventh years, you can prematurely withdraw your bonds, your money, but there is a condition to it, and we'll talk about it. Uh, if you cannot if you don't want to withdraw the money from and sell it back to the government because of the lock-in period, then you can easily sell them in the market because these bonds are tradable. But of late the liquidity has been poor, so it's not so easy to uh, sell, or they are sold at discounts. You won't be able to get a lot of capital appreciation there. So best is to hold it till maturity. So another good feature about this, that if you hold it for 8 years, the capital, there's nil capital gain, or you don't have to pay any tax. But if you sell it before 8 years, 5 years, 6 years, 7 years, you have to you will be charged capital gain tax. Of course, demat account is required to hold sovereign gold bonds, and these are very cost efficient because you don't have to pay any charges at the time of buying or selling. And on the other hand, you also get a discount. So these are some of the most important and very attractive features of sovereign gold bonds. On the other side, you also have gold exchange traded funds. So what are they? They are just like just like you invest in a mutual fund scheme. Gold ETFs are just like that. Only difference is that the money which a mutual fund scheme gets for gold, they only use it to buy gold. So gold is the underlying asset. Now these have to be bought from mutual fund AMCs, and one you can buy one ETF unit, which is as low as one equal to one, as low as 1 gram of gold. However, there is no interest received, and only money you can make is by appreciation or the capital gain. And the prices of gold ETF change on daily basis because it is traded as a stock on Bombay Stock Exchange and NSE. However, liquidity is very high because it can be sold anytime, and there is daily buying and selling of gold ETF on exchanges. Of course, as a tax, it is charged to capital gain tax. Again, you need a demat account to hold ETF, and while buying and selling, you need to pay some AMC charges and brokerage fees. So it's not as cost efficient as sovereign gold bonds. But On a holistic side, the sovereign gold bonds and gold ETFs are the best way to hold gold as a for investment, and just for so many advantages which we saw in the previous slide. So, what are the best practices for gold if you have to hold as an asset class? First, important thing to note is that 10% of your portfolio should always be in the gold. And the reason for that is because it provides a very good diversification. It is safe, it is highly liquid, it gives you moderate returns, and it is a hedging device. Why? Because it has got an inverse relationship with equity. As the stock markets rise, gold falls, and when the gold or the stock market is falling, then the gold is increasing. This is the general trend all over the world, and so it provides a very good hedging. And so some part of your portfolio as a diversification strategy or an asset allocation should be 10%. Always invest in gold in the form of paper gold, because if you are not buying it because it is very convenient, it has lot, you have a purity angle to it, it is cheaper, safe, so hold paper gold instead of holding the gold in physical form. And of course, as we saw, first best option is to buy either sovereign gold bonds or exchange traded bonds. If you want to buy for a long term, go for SGB. If your horizon is 5+ years, or if you want for a shorter period, then gold ETFs would also work because they are more liquid. Similarly, but if you want to buy gold jewelry, only buy it if you are wanting to wear it or you want to gift it to somebody, but never for investment purpose. So, friends, this is what I wanted to speak to you about buying gold or investing in gold. If you have any queries or any feedback for me, you can write to me on my email or ping me on my WhatsApp number. You can also connect with me through my social media handles. And if you like my video, please do subscribe to this video channel. Thank you and see you again soon.